Are you staring at the daily AI stock roller coaster and wondering whether you should jump in or run for your life? Those gut-wrenching price swings aren't a crisis, they're a camouflage. Underneath the fog sits one AI company that Wall Street keeps misunderstanding. While index fund fans are panic selling, this name just posted its 7th straight quarter of GAAP profit and exploded over 109% year to date, all while locking down government contracts in the billions. In the next few minutes, I'll show you why I'm considering Palantir Technologies, ticker PLTR, and I'll walk you through my complete analysis using Seeking Alpha, Morningstar, and AI tools, and give you the exact price zones where I'd buy, hold, or ring the register. Let's start with Seeking Alpha, and I'm going to share my screen now to walk you through exactly how I analyze any stock. First thing I do is pull up the main quote from Seeking Alpha. Look here at the top. We immediately see this stock up a whopping 109% year to date. That's an enormous move, but the headline number doesn't tell me if it's a buy or a sell at current levels. Now I scroll down to Seeking Alpha's quant rating system. This is pure gold for quick analysis. Look at this. The overall rating is a hold with a 3.49 out of 5 score. Then I go down to the factor grades, and I look at valuation, growth, profitability, momentum, and revisions. First, let's start with growth. An A-, profitability an A, momentum an A+, which confirms the operational strength. But watch this red flag. They slam it with an F on valuation. This tells me the growth is real and they're making money, but I'm paying a serious premium for those qualities. Let's go up here and click on financials. Let's go down. Let's look at revenue to see where the rubber meets the road. See this beautiful ascending pattern? 7 straight quarters of accelerating growth with no signs of slowing. Q1 2025 hit 884 million, up 39% year over year. That's not slowing down, that's speeding up quarter after quarter. But here's what separates Palantir from other AI stocks. Let me click on profitability. Palantir has had 7 consecutive quarters of GAAP profit, while most AI companies are still burning cash like there's no tomorrow. As we look here at the sector median, compared to Palantir, they're well above the sector median. This means Palantir is making real money, not just adjusted earnings magic. Last thing on Seeking Alpha, let's check what Wall Street analysts think by scrolling to the analyst ratings section. 26 analysts are now covering Palantir, with an average price target of $110. That's 30% downside from current levels of around $158. But remember, Wall Street is notoriously conservative on high-growth tech stocks, especially ones they don't fully understand yet. Now let's get a second opinion from Morningstar, because I always cross-reference multiple sources. No single platform has all the answers. Here's Morningstar's take on PLTR, and right off the bat, I see the fair value at $100 per share. We're trading at $158. They think it's overvalued by about 55%. But look deeper at their reasoning. Morningstar gives PLTR a narrow economic moat rating, which means they have some competitive advantage, but they're not unbreachable like a wide moat company. For a technology company, I'd prefer to see a wide moat, but narrow isn't terrible. It just means more competition risk. Let's scroll down and check their financial health assessment. And this is excellent news. Looking at their balance sheet, they have about $4.5 billion in cash and government securities. This company could weather a nuclear winter financially and still keep investing in growth. And here's where it gets really interesting. Morningstar projects 25% annual revenue growth for the next 5 years. If they're right, this company will nearly triple in size by 2030, which would justify much higher valuations. As you can see here, approximately $280 per share. Now that you've seen exactly how I research a stock using both platforms, let me give you my complete analysis and verdict. Both Seeking Alpha and Morningstar agree on the fundamental strength. This is a high-quality, rapid-growing, profitable company. The disagreement comes down to price and what you are willing to pay for that quality and growth. Seeking Alpha system acknowledges the valuation concern but still sees the growth momentum, Morningstar is more pessimistic on current valuations but confirms the long-term growth trajectory. My take combines both perspectives. The business is exceptional, but timing and price matter enormously. But I still want to get AI involved to see what it thinks, and then I will give you my recommendation. If you look here in Perplexity, I gave it a following prompt. If an investor does not have a position in Palantir, what is your recommendation on the stock for someone with a portfolio of $10,000 and $100,000? Should an investor stay away from the stock, buy now, or wait for an entry? Please give detailed entry points and recommendations along with risk rewards. Also, give different risk levels on buying a lump sum, DCA, or options play. Please do all 3 risk tolerances. It went through and it answered. Basically goes through and it researches a lot of things and it answers your question. So the executive summary, current recommendations, wait for a better entry. So it gives us a 3-year price chart here, makes it up for you. Tells me it's trading at 158.80. It's up 110% year to date, which is that's right. And a staggering 1,589% return. Gives me the PE ratio, price to sales, market cap, and analyst consensus as a whole. Fundamental business strength, which we went over, it's very strong. It gets into investment recommendations. So it does give you recommendations. So for a conservative investor with a $10,000 portfolio, it recommends 1 to 3%, moderate 3 to 5, and aggressive 5 to 8. And then it switches over to $100,000 portfolio, moderate, aggressive. So it breaks it down and then it gives you a rationale. Strategic entry points and risk assessment. Currently at 158, high risk. Expected 1-year return, either -10 to plus 15%. It even gives you a stop loss here. A target price. First support, strong support, major support. Again, expected 1-year returns, target prices, and stop losses. Investment strategy recommendation. Conservative, avoid lump sum. Implement a 6 to 12 month DCA. Consider cash secured puts at 115 to 125 strikes for income generation. Max allocation 1 to 3%. Moderate risk. Wait for pullbacks 145 to 150. Use 3 to 6 month DCA. Consider covered calls. Target allocation 3 to 7%. Aggressive. May initiate small positions at current levels. Implement 2 to 4 month DCA. Utilize option strategies, include bull call spreads and protective puts. Target allocations 5 to 12% of total portfolio. And then I went in and asked about dollar cost averaging versus lump sum. And then option strategies, the conservative, the moderate, and aggressive, gives you more detail there. And key risk and considerations. Palantir trades at 123 times sales. Competition risk, Databricks and Microsoft is trying to get some of that market share. And then political risk, Doge, which I don't really consider this correct because the Department of Defense, its major customer, had an increase in this last beautiful bill. Analyst sentiment, average price target of 95, high target of 170, which is only a 7% upside. Recent upgrades, Piper Sandler. Long-term investment, Palantir represents a potential secular winner in AI. See how it gives you a article with sources here. So anytime you can just boom, bring that up and you can click on that if you want to check it. So it's pretty nice how it really digs into this. Final recommendations for $10,000 portfolio. Wait for a pullback, 135 to 145. DCA, limit your allocation. Consider starting with cash secured puts, which probably could be a little hard for a $10,000 portfolio, to be honest, because if you do get exercise on that put, that is your whole portfolio. For 100,000 portfolio, more flexibility, can afford 2 to 7%. Consider splitting between DCA and opportunistic gloves. Never invest more than you can afford. Maintain strict stop losses. Consider Palantir a satellite holding. Monitor government contract developments. Be prepared for 20 to 40% volatility, and it gives you a bottom line. For some of you viewers, you might have caught the lightning in the bottle. What if I bought the stock at 25 to 100 shares with a cost basis around January 1st, 2025? What do you recommend I do with my shares? Sell all, take partial profits, set stops, etc. Hypothetically, I bought January 1st, 2025. And it congratulates me on my return, 111%. However, with quarterly earnings approaching August 4th and extreme valuation concerns, strategic positions management is crucial to protect gains while maintaining upside exposure. Current position analysis. 25 shares, initial investment, current value, unrealized gain, near return, 50 and 100. Earnings catalyst risk. It talks about earnings again, talks about the high PE ratio. Technical analysis signals, RSI. Relative strength index, 68 to 72, stock near all-time highs, which is not necessarily a bad thing. It's pretty good because there's no overhead resistance. Strong support levels at 145 to 150 and major support at 128 to 135. Strategic recommendations by risk tolerance. Conservative, sell 50 to 70% of your position. With 111% gains, you have already achieved exceptional returns that exceed most annual market performance. The risk-reward ratio shifted remarkably. Implementation, sell 50 to 70% immediately. Set a trailing stop loss at 145. Target price for remaining position, hold for potential 170 target. Moderate risk, sell 25% at 160 to 165, 25 to 140 to 145, hold 50% with stop loss strategy. So as you can see, goes into earnings strategy considerations. Option 1, reduce risk, sell 30 to 50, play the volatility, sell covered calls, buy protected puts. Post earnings strategy, if stock gaps up 10%, consider selling additional 25. It does a really good job of giving you a game plan on what to do. Every week you can put this in and still have it evaluate. I've done that with Bloom Energy, a stock that I'm up 50% on in a month. As you can see, it's really good tool to use. So here's my recommendation for Warren's Money Buffet viewers. And remember, I currently hold no position in Palantir, but I'm actively watching it. And remember, this is for educational purposes only. I'm not a financial advisor. My rating is a hold with opportunistic buy opportunities, and here are the specific price zones you should screenshot and save. Below 130 per share, I rate this a strong buy and would start accumulating aggressively. At those levels, you're paying under 95 times sales for a company growing 35% annually with expanding margins. That's historically been a sweet spot for entry. Between 130 and 170, I would hold current positions if you own it, and maybe add on major dips of 10% or more. This range represents fair value for the growth rate, where risk and reward are reasonably balanced. From 170 to 200, I consider trimming 10 to 20% of your position if you're overweight as we approach the high-end price targets where 20 to 30% drawdowns become common in growth stocks. Above $200, I'd seriously consider partial sales or writing covered calls to lock in gains while potentially riding further upside. The risks are real and you need to understand them before putting money to work. Now that you know exactly how I analyze stocks using Seeking Alpha, Morningstar, and AI, plus my specific price targets for PLTR, you're going to need to know the 3 red flags that could crater any high-flying AI stocks valuations overnight: dilution spikes, contract cancellations, and growth deceleration. If you don't spot these warning signs early, you might load up at the top and watch a 30% drawdown wipe out months of gains in a matter of days. I have numerous videos on my channel about AI stocks. Click the link appearing on the screen right now so your profits don't vanish in the next earnings cycle. If you want to follow my trades, like my Bloom Energy trade that is up 50% in a month, then check out my Substack link in the description, and also check out my Bloom Energy video on this channel. Don't forget to like this video if it helped your analysis process. Subscribe for more Warren's Money Buffet stock surgeries, and drop your PLTR strategy in the comments. Are you buying, holding, or waiting on the sidelines? Until next time, see you again.